Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is a cannabis business podcast. Good news on the cannabis investment front. Jefferies Group just announced that their fears of cannabis commoditization is overdone. Jefferies is a New York-based investment bank that initiates coverage of the cannabis industry. And this week, there was another sign that Wall Street's prudence is catching up to Main Street excitement over the burgeoning industry. The valuation of the overall cannabis industry fluctuates between about $50 billion over the next decade, according to Jefferies, up to a realistic upside to $130 billion based on wider industry disruption. So putting that into context, Jefferies estimates the industry is worth $17 billion today. So the key takeaway from the Jefferies report is global winners will be those that lead in both medical and recreation, have a strong U.S. position. Fears on commoditization are overdone. They expect to see further consolidation, and the near-term focus will shift from performance versus headlines and capacity expectations. If any cannabis company wants to claim large cap or even mega cap future status, they need to have a strong position in the U.S. Although all coverage names are not currently allowed to have U.S. operations while it's federally illegal, they should still be establishing optionality if or when U.S. regulations change. The often used bear argument on the cannabis space is that weed is just another agri-commodity, and therefore all flower will become commoditized. They also argue that price compression will happen in the next 12 months due to oversupply. There are a couple issues with that. The first being that premium flower can't assume fungibility like any other commodity, meaning it's not going to change hands the same way. You have different people who appreciate that and value that. And then second, perhaps an anti-consensual that they don't see a period of oversupply until 2021 at the earliest. Oregon has over 1 million pounds, I believe, outstanding. So right now we're already seeing that certain areas have grown too much, but maybe the industry as a whole won't reach a peak for another 2 years. Time will tell. The long-term winners in the medical space will be those that are investing in clinical trials, applying for patents, and are backed by strong medical teams with experience. Adult use will have to create brands that have value-added products as well as deliver differentiated experiences. Jefferies is covering Canopy Growth, Aurora Cannabis, Kronos, Hexo, the Green Organic Dutchman, CanTrust, Organogram, Emerald Health Therapeutics, and Flower Corp. The stock market has always offered risks and rewards, and now that the cannabis industry is involved, things have gotten a little bit dirtier in terms of trying to understand how that works out. Is it riskier to invest in one single stock that's an IPO and hope that it expands into a unicorn? Or is it safer to invest in a portfolio of stocks and just invest in an ETF that tracks these individual stocks? I suppose that's up to your own individual risk tolerance as well as where you think this industry will go overall. Looks like cannabis stocks are soaring again after a rough end to 2018. Many of the top stocks have been on a great run since January. Shares of GW Pharmaceutical have been gaining after the company's epilepsy drug Epidiolex became the first cannabis-derived drug to receive approval from the FDA. Last year, Tilray received the DEA's approval to import cannabinoid study drug into the U.S. The stock market, which IPO'd on the NASDAQ back in July at $17, is up 250% since then. It's the first cannabis company to go public on a major U.S. exchange. The cannabis industry is growing fast, gaining legitimacy, and according to data from research firm Euromonitor, the American market for legal cannabis products will reach $20 billion in 2 years. Many beverage giants are investing or planning to invest in cannabis. Coca-Cola is reportedly in talks with Canadian cannabis company Aurora to develop a cannabidiol-infused beverage. Cannabidiol is the non-psychoactive substance in cannabis and is known to have some health benefits. Constellation Brands invested $4 billion into Canopy Growth, raising its stake to 38%. The recreational cannabis market became legal in Canada in October and still remains illegal at the federal level in the US, but 33 states and the District of Columbia have legalized it for medical or recreational use. So investors should remember that the cannabis stocks are extremely volatile and these younger and riskier companies in an industry that continue to evolve. There's an option for an exchange-traded fund, kind of a portfolio, if you will. And one of those options is the ETFMG. We've talked about the Alternative Harvest ETF a couple of times. It's the first and only pure play of US-listed ETFs targeting the cannabis industry. It holds 35 companies that are involved in legal cultivation, production, marketing, or distribution of cannabis and related products. The ETF has changed its custodian and other service providers. So it was trading above its net asset value, which is the value of its underlying assets. It could mean that there's a redemption process for ETF shares that wasn't working properly. So the ETF's provider told the Wall Street Journal that a premium resulted from a sudden surge in demand for cannabis stocks. Here's a top list of Canadian cannabis companies by revenue. We saw 2018 as a significant year for legal cannabis companies as legalization continued to spread through additional parts of the US and across the entire nation of Canada and elsewhere, as cannabis companies and investors alike saw a major opportunity. The result was, at least in some part, a dramatic increase in the predominance and hype surrounding this growing industry. More and more companies have launched, although a relatively small number of them have made it so far as to have their stocks listed publicly on a major US exchange. Some major non-cannabis companies like beverage producer Constellation Brands have invested heavily in cannabis-focused businesses in a show of support for the future of the industry. On the other hand, there's some reason to be concerned with the legal cannabis industry. Of course, just because cannabis is legal in some form or another in a plurality of states doesn't mean that it's legal at the federal level in the US. This poses some serious threats and barriers to the ability of cannabis stocks to secure financial support, like loans to conduct business across state and international borders and more. And what's more is there's been fear that the cannabis industry is more broadly is overblown, with companies potentially extending themselves too far in a bid to buy up competitors, expanding, growing, and production capacities, and preparing for an industry that enjoys worldwide dominance. For many investors, the proof of the cannabis company's success is similar to that of any other company. It's in the financials. So now that cannabis businesses in Canada have reported their first set of financial results since legalization took place in October, analysts can get a better sense of just how justified or not the hype has been. So we'll take a look at the top revenue generating cannabis companies for the most recent financial information available as of February of 2019, starting with Canopy Growth at $83 million is their net revenue, and yet their market cap is probably in the billions. Yeah, that's one thing I would take a look at. I know that it's a new industry and it can only go up in the beginning, but at some point you need a return on your investment. So if revenue is only 29 million, but you have a net operating loss of 62 million, there's probably something wrong. I realize that there's a lot of growth and opportunity, but that's going to be on the back of other people's money. So it's essential for these Canadian companies to use the publicly traded marketplace to expand, and they are dropping a lot of money for that brand recognition and that opportunity to kind of come back into the US, which is the biggest marketplace, to secure a foothold in the CBD hemp industry until that legalization flips over and they're able to utilize the THC. In addition to Canopy Growth, Aurora Cannabis had revenues of almost 50 million, followed by Afria, 21 million, and CanaTrust at 12 million. These companies have a major advantage already. They have an international opportunity to have been established in Canada. They have international export agreements across the world. Now they're coming back into the US, the world's largest marketplace. They're establishing all of their assets, their property, plant, and equipment in the US, their foothold via the hemp and CBD marketplace. And then when cannabis is legal, they are going to have a huge head start as everybody is standing in line to open up a checking account. And with that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge, and I'm out.